Can we choose a debt mutual fund based on past performance? Mr. Hariharan, as an industry expert, what is your view on this?
Investing purely based on past returns of the debt mutual fund. Now in equities, you can take this risk, okay, because you know that in a 10-year time period, all funds will do well, isn't it? So that risk is possible. You look at historical performance of equity funds and you extrapolate and say that if that fund has given 15%, very high possibility it will give 15%. Even otherwise, equity will tend to give 10-12%. Right? But in debt, it does not work because your interest rate scenarios could have changed. The return that you say. So today, when you look at the interest rates, we are looking at a peak of the interest rate cycle. All these instruments, as I showed in that slide, have gone up. So, and if you therefore say that, oh, my liquid fund has given 6.5, let me put my money in the liquid fund. Will it give next 1 year 6.5? I don't know. So just don't go blindly by what has been the past returns and say that this fund has given very good performance last year. Therefore, let me invest in this fund is not the right way to do. Instead, you look at something called as YTM, which is yield to maturity of that debt mutual fund. So in essence, it tells that if I hold that debt mutual fund till the maturity of the fund, and every fund you have those data points available, what is the maturity of the fund, what is the YTM, it says that if I hold it till its maturity, I should expect that returns. Please remember that I'm using the word expect. It is not guaranteed. I am not a great favor of YTM based investment, but relatively between past returns, it is better to look at current YTM because that will give you a better estimate of what you can get.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.